Today is August, and I'm going to do a review of the main parameters that we would consider when assessing the performance of the home market in the Dallas-Fort Worth area. Today, I'm going to look at 4 specific counties, which is Dallas, Collin, Denton, and Tarrant County. So if you have properties in any of those counties, listen up. First of all, today is August, so we're looking for the data that ends in July. For the median sale prices, as we can see, the performance in almost all counties is very similar. We see that the Denton County, so the blue and the gray one is Denton and Tarrant. So they are actually almost the opposite performance of each other, but what we can see in all cases is that they ended July on a slight upswing. Hey, this is August 2024 update, and today we're going to look at the performance of the home market in 4 specific counties: Dallas County, Collin County, Denton County, and Tarrant County in North Texas. Let's start with median sale prices. This is the trajectory of the sale prices this year so far. As you can see, this is the beginning of 2024. As you can see, we had a small bump in February. Now, please be aware or remember, keep in mind that what closed or what sold in February probably went under contract in January, since we have anywhere between 2 to 4 week delay from the time the contract is signed to the time that we see closing happen. Okay, so as you can see, let's look at our trajectory so far. From January, we see a small bump in February, which means that in January there was quite a bit of activity to write up contracts, which then led to a little bit of a slowdown, which continued all the way until May. May was the peak of the prices for all counties in 2024 so far. As you can see that after May, some counties declined pretty rapidly. So for example, this is Collin County, dark red is Collin County. As we can see, Collin County went straight down, losing quite a bit of value. So for example, in May, the average or the median sale price in Collin County was $565, while in July it was $540. So we lost about $25,000 worth of value over the period of 2 months. If we go to Dallas County is in blue. We see that the peak was again in May. The median sale price in May was $388. Then we dropped down and then we stayed flat after that, not really losing ground, but not gaining ground. But we can see that in July it was $375, which means that we lost about $13,000 in value for Dallas. What about Denton County? Denton County, again, the peak was in May. In May, we had the peak of $480 median sale price. Then we dropped down slightly in June. And then we actually went slightly back up in July, just tiny little bit. So the difference between $490 and $485 is just $5,000. So as we can see, Denton County is doing a much better job than, for example, Collin County in maintaining its value and not dropping. Only $5,000 lost in value across all homes sold in Denton County. Let's take a look at Dallas. So Tarrant. So Tarrant is the most interesting picture. As we can see, beating all other counties, Tarrant did not have the highest price point in May. It actually had a slight dip in May, which is kind of surprising. And I'm not quite sure what to attribute it to. But we do see that in May, Tarrant County was selling at approximately $350 for a median sale price. Now, please be aware that this is for single families, 3 to 4 bedroom, and it's for resale. I'm not counting any construction. Tarrant County was the only one who performed against the expectation, not having a sharp increase during May. However, it reached its highest value so far for this year. This year start in January. So for this year, the highest value has been $364, and it actually increased $14,000 since May. Unlike, for example, Collin County, which lost quite a bit of money since May. So this is the performance for the median sale price. Let's take a look at month supply, which means how long is it taking to digest, how long does it take for the market to digest the property that are currently in the market. What do we see starting from 2018, and we can even go back a little bit further so we can see the overall performance for the last 10 years. As we can see, starting from 2014 until now, our highest inventory levels were in 2019. Okay, so from 2014 till now, the peak of inventory levels was in 2019 in June. Sadly, you see the peak of inventory levels for those counties in 2019 was 3.2, 3.8, 3.1, 2.4. Unfortunately, we are beating the highest levels of inventory in the last 10 years with slightly higher numbers. So, for example, we have 3.4, 3.9, 3.7, 3.4. As you can see, the inventory levels for all markets, which is Dallas, Collin, Denton, and Tarrant counties, are higher than they were in 2019. By how much? Well, let's just take a look. In 2019, Dallas County was 3.2. Right now, it's 3.4. So it's not that much bigger. Collin County was 3.8, and now it's at 3.9. It's pretty much tracking to the same numbers. Denton County was 3.1 months of inventory, and now it's 3.7 months of inventory. So Denton is experiencing totally highest levels of unsold properties in 10 years. And then the Tarrant County had the sharpest increase. In 2019, it had 2.4 levels of inventory at its highest peak. And in 2024, we're seeing 3.4 months of inventory, which means that there was a huge buildup of inventory since then, potentially new construction, that are now entering the play and competing in the same marketplace as everybody else. So that is our months of inventory. So how does months of inventory reflect on the pricing? It suppresses the pricing because the more inventory is sitting unsold in the market, the more choices the buyers have to take their money to those sellers who are offering concessions, interest rate buydowns, lower prices, etc. For that reason, the higher the inventory, the harder it is for you to be able to maintain your high price. However, please don't forget that this is county-wide, and in one county, there could be a wide spread of performance. For example, in Dallas County, we could see some cities or some zip codes having 1 month of inventory and others having 7 months of inventory. So the average or the mean is not going to tell you the full story, but it does show an overall trajectory of all the counties that are listed here. Let's go ahead and take a look at days in the market, which is closely related to the months of inventory. Okay, so we actually see, and this is a little bit encouraging, in the past 10 years, we see that the highest days in the market were actually in 2019, right before COVID hit. In 2019, we had 26, 48, 33, 27. We had higher levels of inventory. Now, this is interesting, or higher levels of days in the market. So this is interesting because you can see the inventory last year were almost a half of what it is right now. And the inventory the year before was a half of that. And the inventory the year before was even a half of that. So we're at the highest level of inventory. However, this is the encouraging part. Despite a larger inventory swell, we are actually having fewer days in the market than we did in 2023. Why? Because I think in 2023, people were still really, really adjusting to the idea of higher interest rates being above 5 and 6 and 7%. So people were taking a lot longer to think whether they really want to buy a house. And in 2024, I just suspect that people have already agreed that the 6 and 7% interest rates are here to stay. Therefore, they might be able to make their decisions a little bit faster. Now, please take a look that we had the highest level or the highest days in the market in January, of course, the holidays. And then we are almost at the lowest levels of days in the market in July. So in July, we're only at 15, 12, 13. So 2 weeks worth of days in the market on all 4 counties, which is a very healthy showing despite the high days in the market. Those two things are a little bit contradicting one another. All I'm saying is that days in the market show how quickly those properties, now this is the difference between months of inventory, months of supply, and days in the market. Days in the market show sold homes, sold homes. Because they show sold homes, they show those homes that sold quickly. So I noted that there is a tendency among houses. Some of them sell within first 2 weeks, and other ones linger for 2, 3, 4 months. So if you're taking only winners, only those people who have beaten the crowd and they won the competition and they went under the market and sold, then measuring the median temperature of those winners against the runners who are way behind them, the house that's been in the market for 2, 3, 4, 5 months sometimes, we're seeing kind of an unfair days in the market. It's kind of skewed toward the winners. But anyhow, days in the market are fairly short right now compared, for example, to 2022 or 2019. Okay, that's for the days on the market. Let's take a look at our home for sale. What is our inventory? Now, noted that months of inventory here is showing picture number 1. Homes for sale is showing picture number 2. The difference between months of inventory and homes for sale is a simple calculation of how many homes there are currently on the market. So, for example, 3,800 in Dallas County or 3,000 in Collin County. It's a very straightforward calculation. While months of inventory is a formula. That formula takes the number of homes that is for sale, let's just say 3,861, and it divides it by closed sales, let's just say 1,200. That creates a calculation of a fraction of some kind. So homes for sale, as we can see, we are actually still pretty much higher than we were in, well, actually 2019 appears to be a little bit more aggressive in terms of number of homes for sale. We're right there with them. We're catching up quickly. But nevertheless, hopefully, we're not going to beat this record, but we are approaching the 2019 pre-COVID numbers on the homes for sale. Now, closed sales that closed in July in last month's event. As you can see, performance here is way more similar. Okay, so this is the interesting part. If you look at number of homes for sale, which is number of homes that people put in the market, now whether or not that house actually sold, still in the market, or got canceled, versus closed sales. So as we can see, we see big swings in patterns of people putting their homes on the market. Okay? But when you take a look at behavior of the sellers, this is the sellers' patterns of thinking. But if you take a look at closed sales, I like the encouraging view of it. This view shows me that regardless of the mood of the sellers, which sometimes wanes and rises, we have a fairly consistent behavior among the buyers. As you can see, every year we have the exact same bell curve type of a shape. We have typically our highest prices in June, July, August, June. Okay, so as we can see, what is encouraging about this graph is that we see that unlike sellers who are apparently very, very affected by the ebbs and flows in the market, the buyer's been showing up pretty consistently and the buyer's been closing on homes pretty consistently. Now, we do see that the highest number of closed sales, sold home, was in July 2020. It was either uphill up until then or slightly downhill until then. We see that in around September 2023, the market really collapsed. See how much fewer sales. There was almost like compared to June of 2023. In September, we had about half of the sales of June. And see how deeply it crashed the demand. We called closed sale the demand. So the homes for sale is supply, closed sales the demand. We see how deeply it crashed in 2023, and we're hoping that we're not going to avoid the same issues in 2024. But nevertheless, you can see that closed sales show much more consistency in patterns volume of purchases than they are homes for sale. Last but not least, shows to penny. How many visits to the property does it take to obtain a contract? And we can see that we are definitely pretty skimp on the buyers. There is not that many buyers walking homes. So, for example, in 2022, in December and January of 2022, we had on average between 18 and 32 people visiting a home before it went under a contract. In comparison, we have 4 to 5 now. So we're having approximately 3 to 4 times fewer buyers visiting properties than they did in 2022. I hope that was interesting. Let me know if you think that we could improve something with our calculations or show you additional calculations that we did not cover here. And ask me any question in the comments, and I'll see you in the next video. My name is Elena Garrett, and I am an agent with Keller Williams Central 75 in the Dallas-Fort Worth area of Texas. Cheers.